What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Mark Updegraff. How you doing, Mark?
Good. How are you doing, Dan?
I'm pretty good, but I gotta let you know about one thing that's really exciting today, Mark, which is today we are joined by my very favorite audience member. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate syndicators. That means buyers, sellers, investors, all that kind of thing. And why would I want to do something silly like that? Well, if you've ever heard of off-market deals or private deals, they're sometimes called 506B syndications. You have to have a documented substantive relationship to show the SEC, to show that you're not publicly soliciting people. You actually understand people's appetite for risk, basically what they're after and their core competencies. And that's what we're up to. The added benefit for you is you will be able to effectively communicate on the subject of commercial real estate. But before we get too excited about business, Mark, do you want to say a thing or two about yourself?
I don't know. I'm a broker. I've got a property management company. I've just been obsessed with real estate since I bought my first rental back in 2008. And I've told everybody since then, it's like we got to be buying as much real estate as possible because our window of opportunity is shrinking and shrinking. And I feel like, it has pretty much shrank to the point of non-existence. And we're going to go back into another cycle over the next couple of years. So I'm trying to get everybody amped up again that was kind of disillusioned by where the prices were in the marketplace and just running the pro formas and not really seeing much meat on the bone. So I'm really excited to go in these next couple of years and see how things shake out.
Yeah, me too. I love that way of putting it. It's fantastic. And the first segment that we have in our Chance Encounters is going through the 5 distinct motivations. But before I do that, I always have to say, but wait, check your 8. And Mark, I don't know if you can see through your camera and into the user's device, but down there might be this hideous subscribe button that it's really bad. It's a stupid joke. Never mind. Anyway, so I always do that. But about these 5 distinct motivations, the fact is, everybody has their own unique why. I've interviewed a whole whack of different syndicators and investors and met more privately, and quite frankly, they all fairly neatly fit into these 5 different categories. But the reason why I always ask this question is because commercial deals, they take months just to close and get accepted, and there's all sorts of risks involved, lots of work. So I got to find out what is it that's making people stick with this process, and that these 5 different motivations basically explain that for me. The first one is not my one. It's preservation of purchasing power. So some people are out there who already have a portfolio of assets instead of a W-2. And the way that they make ends meet is from the proceeds of ownership. So somebody in that situation, why are they going to make another acquisition? Well, one situation is if inflation is eating away at the purchasing power of the cash flow. The other one is when they're buying at a steep discount because there's an asset crash or distress otherwise going on. So once again, that's not me, but that's a lot of people. Me personally, I'm trading time directly for wealth. So I got into real estate from the CRM industry, emailing 5 million emails a month, and I'm not even exaggerating, for years at a time. And it wasn't for me, it was for the guy who was flipping 10 houses a month. Now, I was making my 6 figures and I was watching my boss make way, way more. But then I also realized that as a high wage, high salary earner, I was paying more in tax than anybody else. So it got me thinking, how do I pivot where I'm getting rewarded for my effort in the form of deployed capital, aka equity? So that's why I am involved in these commercial real estate deals. But a lot of people, especially if they're youngsters, they are excited by the prospect of getting into real estate and commercial real estate because they want to control their schedule. Maybe that means they want to fast track their retirement, but maybe it just means they want to work fewer months per year or fewer weeks per month. Who knows what it is, but the idea is they want to scale back. Whereas this next group, they're more motivated by ambition. They want that generational wealth. They want to make sure that their great-grandchildren never have to hold a day job. They want to buy up their whole hometown. And that's great because they're going to hustle into their 90s, which is also similar to this last group, who their motivation stems from they've picked a sector of society, or maybe it's the environment, or maybe it's animals. Who knows what it is, but they realize if you're actually going to make a big impact, there's a financial component to that. So that's why they are making these acquisitions and building their own nest egg to make that difference. So Mark, for you, of those 5 different motivations, what combination of those would you say describes you best?
Yeah, that's a great question. So I've got 3 children and a wife, and so obviously I want to get them off on the right foot. But I read a quote somewhere, and I probably won't do it justice, but it's basically, you want to give your kids just enough that they can get ahead in life. But if you give them too much, then it's going to make them complacent. So I think it's a fine line between setting up generational wealth where they don't have to hold a job versus, I want them to have a job, but I want them to think about employment and income differently than the school system's teaching them, right? So I've already got my 10-year-old on the path of, he understands what a W-2 is. He understands what a 1099 is. He can, calculate commissions. So I'm kind of, from a young age, instilling this difference between having to work for money versus having money work for you. And so anytime we're doing anything where I can relate the conversation back to that, that's what I'm doing. So that said, I do want them to have a leg up, right? So my parents gave me a leg up. My father worked his butt off. He was an entrepreneur. And just watching his journey, he wasn't able to hire his first employee until I went to college. And, he was an over-the-road trucker, and he just ground it out as long as possible. And, eventually he saved up enough money to, he bought his first truck. And then ultimately he bought another truck and he hired somebody to drive that truck. And I saw that process and how much work went into it. And I have a really deep respect for entrepreneurship. A lot of people today, they think, okay, I'm going to start a business and maybe it could happen, but I just don't think it's the norm. You start a business and you just become very, very successful in a short amount of time. I think that it's a lot of hard work. And a lot of times what you don't realize is people that have become super successful had a legacy of people that came before them that really worked their butts off to be able to provide that advantage for them to leapfrog their career a little bit higher than they would have if they were literally starting from scratch. So my motivation is definitely for my family, but I want to have them educated. I want to have them have a respect for the amount of work that goes into this. Like, I want them to make sure they understand what my father did and what his father did before that, in order to have a little bit deeper understanding and respect for money and stewardship of money, and then be able to also pay it forward, because there are people that are less fortunate than us. We happen to live in a country where the standard of living is just out of this world compared to some of these other places. So I want them to see those things, experience those things, and then be able to, live here, be prosperous, but then be able to pay it back into maybe other areas of the world that don't have the same advantages that we do.
I love it. That's a great way of putting it. And you covered a lot of grounds, and part of it goes in this next question's direction, which is the tolerance for risk assessment. So if you've ever been involved in a 506B deal, the issuer's security attorney should have got you to fill out this questionnaire, and it has some really invasive financial questions. Basically, when you fill that out, they know more about your financial situation than your parents probably do, or you know about your parents. But there was one question in particular, with my experience making these different wizards and quizzes and tests and things like that, I wasn't really satisfied with it. And it was their question about tolerance for risk. And I think that this one gets me much closer to an answer that is usable and I can trust. It's a fill in the blanks question. It is. There are many popular investment asset classes, but I think blank is too risky. So Mark, as far as you go, it can be inside real estate, it can be outside real estate. What's too risky for you?
So I've been really thinking about this investment for a long time. I haven't pulled the trigger, and it probably is because I think it might be a little bit too risky for the future. You know, a lot of people are jumping into the short-term rentals, and you know, you can see particular markets, especially you know, like vacation destinations, where the prices of housing have just gone through the roof because they didn't have very good regulations on the short-term rental markets. And people, you know, coming from all over the place have come in and gobbled up these properties, knowing that they can get these exorbitant rates compared to a term lease. And, you know, you'll have these little micro neighborhoods where the prices are just very high because of it. And so I think that short-term rentals for me, unless it is like super, super calculated, you're right, I'm a broker. I'm really good with numbers. If I could still operate the asset as a term rental, like a long-term rental, and be okay, sure, I would operate it as a short-term rental. But personally, I wouldn't underwrite something based on these daily rates and, you know, high occupancies, even if they are in a pretty screaming area. Just, you know, I don't know what a recession would look like in the short-term rental market, especially a deep, prolonged recession. And I would be a little bit hesitant to do something like that if I couldn't operate it as a term lease. And I think a lot of these do not work as a term lease.
That's a beautiful answer. I absolutely love it, especially because if you watch municipal governments, these short-term rentals are absolutely in their crosshairs. But you know, I've been thinking about that since about 2018, and I never really pulled the trigger on that. So I just love that answer. I'm just eating it up, just like this reminder for people to, this thing just kills me every single time. But it is the segue into the part where I pull out the Dan Does Deals Commercial Core Competency Cube. You can get your own copy at dandoesdeals.com. It's 100% free, and like a complete dummy, I don't even ask for your email address. And from a marketing perspective, that's the worst thing you can possibly do, is give out your freebie and not ask for any contact information. But what I'm getting out of it is I actually want you to print it out, try it out on your friends and family. And quite frankly, the reason I do it is because I realize if you want to get into this business of commercial real estate, the biggest barrier you have is effective communication. You must be able to talk about these deals very effectively and clearly, so you know who's doing what and why you don't have the answers that the other guy is supposed to take care of. But in every episode of Chance Encounters, I go through all 6 sides. It only takes about 2 minutes, but this is just a blast. Let's do it. So the repositioner side, that's an acquisitions guy. So they're looking at a bunch of different properties and they're doing a bunch of paperwork. Now, what's that unbelievably exciting paperwork I'm sure you're thinking about? Anyway, it's underwriting. They're doing the math. They're figuring out, first of all, is this property actually even making the amount of money that the seller/broker is claiming it is? Because there are a few different ways to cook the books and make it look like it's doing better than it is. So you better be able to see through all that mist, which is a little bit difficult. But the repositioners are doing all that arithmetic, and they're figuring out how to change the property and how it's run so that they can find more upside. And one of the more peculiar, it's easy for me to say, one of the more peculiar parts of a repositioner's job is investor relations, or working with financiers, the different lenders. And the reason for that is because if you can secure a more advantageous loan, then that goes straight to the profitability of the building. Okay, so cheap loans equals more profitability. And so every repositioner has to know a bunch of different lenders. And these financiers are people who only deal in paper and money. So they are not involved in the GP team. They, there might be fund managers and whatnot, but that's the most confusing thing, I think, of what repositioners are up to. But when they are trying to reduce expenses, that is really the wheelhouse of operations. The operations team has to stop these Benjamins from going down the toilet. But of course, there's much more to operations than just unclogging toilets and mowing lawns and collecting rents. One of my fortes from all of my experience in CRMs and getting into social media to promote my various businesses is the marketing component. And that comes in if you have a vacancy rate issue, even if you have a third-party property management like I do, because I focus on more than 100 units per deal, then somebody has to have some marketing chops to step in to get those units filled. So that's one of the things, one of the quirks of me being on my GP teams. But there's only so much you can do in operations because commercial real estate is a competitive business. So frequently the repositioner will need to get a contractor team involved to do a value add, to do some renovations, to make the units nicer. And then that way the next residents are more likely to be happy to pay more in rent than the previous one, and there's how you capture the upside. But of course, you have to make sure that there's a return on investment for everything that you put in on the contractor side. So gold plating toilets is not such a great idea, and you have to make sure that the contractors aren't using substandard parts, there's keeping the schedule. And I don't know if you know this about me, but I'm from the internet. So I'm not going to be the guy who's able to check it out. I'm not going to be able to be there in an hour or two. That's the local, the boots on the ground. That's their job. Somebody who can be there in an hour or two to check in on the place, make sure that the contractors are doing what they're supposed to. The operators, they're not sloughing the photos and information that they're sending to you. Basically, I'd be stuck at an airport in an hour or two, so you can't rely on me for that. But when the repositioner has found the property they want, let's say they're turning around to the financiers and they're saying, all right, I've got a group of my buddies, we pull some resources, and it's 350 units and tens of millions of dollars. Do you have, I don't know, tens of millions of dollars you want to lend us? And the financier is going to have one other question that many gurus and coaching programs, they really gloss over, which is, who is the KP? Who's the sponsor? And what's that all about? Well, picture this. If you're an engineer or a physician, something like that, and you have a circle of friends, you want to pool your resources and take over that 350 unit apartment complex, the snag you're going to run into is somebody in the fold, a sponsor or a KP, must already own a similar asset or you will not be eligible for the commercial loan. On top of that, you need a certain amount of liquidity, and then among the ownership team, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So, Mark, as far as you go, which sides of the die are you most likely to be sticking to on your next deal?
I do a little bit of everything. I still wear a lot of hats, so luckily I've built out my staff pretty extensively. I'm up to like 15, 20 people to help with some of the operational aspects of it. But, as the owner and founder of a couple different companies, I'm still pretty involved, right? I manage my managers. So I'd say you can see me pretty much anywhere on that die.
All right, excellent. So that brings us to the buy box then. And when commercial syndicators or investors are saying, hey, what you looking for? What's your ideal property? What's your buy box? We're really asking about three main things. First one's geography. Which states? Which counties, which neighborhood, okay? You've got to know where it is, okay? So that's the geography. The second one is size. Most of my guests on this show are in multifamily, and in multifamily, aka apartment complexes, the size is defined by the unit count because you're going to have a completely different group taking over 5-unit apartment complexes compared to the 150-unit apartment complexes. So that size definitely matters. There are other forms of commercial real estate where you go by square footage, but that's still going to be important is that size. But the third one is called class. And because one of my pet peeves is having one word mean more than one completely different thing, I split class into condition and area. So condition has to do with how old is the building, how beat up is the building, how up to date is it as far as the luxuries and amenities, or is it really like bare bones, that sort of thing. So that's the condition. But the area is talking about things like the crime rate where the property is located, the school districts where the property is located. But both of those versions of class have to do with the overall desirability. So the ranking system they use is A+ at the top, and then A, and then A- and B+. So Mark, as far as you and your group goes, where's the sweet spot? What's easier to say yes to and more difficult to say no to?
Yeah, so I'm a solid B. There's a lot of guys in my area, Rochester, New York, that will go into the C's, and I think that they end up with a lot more issues than they realize getting into it. Their pro forma breaks down a bit. So I'm a solid B guy. I'm definitely trading off cash flow when I do that, but my tax returns look a lot better than if I were to purchase C. Kind of been there, done that. A stuff, if you can get it for a decent deal by buying from like a legacy owner, I would totally take A. I love A. But I would say that that's, maybe 20% of the portfolio, and then 80% is going to be in the B. And for me personally, 0% is going to be in the C. I stay away from it.
That makes lots of sense. So my next question then is about people. My favorite part about commercial real estate is because nobody is all the sides of the die for any real meaningful amount of time, like years and years and years on end, because you're going to specialize. We're
Mhm.
all very eager to give referrals, to build new teams, but at the same time, we have our own unique skill sets, which means we're going to be better suited to help some people more than others. Me personally, with my marketing and CRM and automation and all this internet mumbo jumbo, the sponsors and KPs are generally who I want to meet because they already
Mhm.
have foundations where somebody like me makes a really disproportionate difference. Whereas when
Right.
you're first getting started as a repositioner, you need somebody who's putting in 80 to 120 hours a week. But the other one too, again, because from the internet, is the locals. I'm also very interested in meeting. But Mark, as far as you're concerned, who's out there in the audience who you really are well suited to speak to? And if you have any 506B deals, don't reference them specifically. Don't entice those investors like
Mhm.
with a donut or something, because the SEC doesn't like that. But who are you hoping reaches out to you?
I don't care who reaches out to me. I'm upstate New York, Rochester centric. I've been here for the last 20 years, so I've got a really good handle. We're a cash flow market, but we're also in a state that has, very landlord unfriendly laws, right? So when I first got started in the business, an eviction process was 3 months, which I thought drug on way too long. And now we're to the point where, we're lucky if we get them out in 8 months. And the real like insult at the end of it is the judge will stay the warrant off even after you've gone through this 8 month process to get the people out, where he's like, oh, you know what? The holidays are coming up. So we're actually, yeah, we'll give you the warrant of eviction, but they can stay for Thanksgiving. They can stay for Christmas. They can stay for New Year's. And, they're going to need like another 2 weeks to pack their stuff and get out. So we're just going to hold it until mid-January. Meanwhile, you're paying taxes, you're paying insurance. So that kind of stuff really bugs me about the market that I'm in. But we've got such good pricing, and that's why I'm an A B guy, right? I don't want to get into those spaces where I got to deal with tenants that are going through that system. And I think that's why, in my marketplace, people come in, they're like, oh my gosh, I can't believe I'm buying a $30,000 unit. This is incredible. I'm going to make so much money. Now you're in class C. You're going to have bad debt. You're not going to collect. You're going to have evictions. So we look great. We are great if you know what you're doing. But so anybody that wanted to reach out to me would have to understand those things. Like, you're not going to come here and get rich quick. It's get rich really freaking slow.
Right, a slow and boring way. I love it.
Mhm.
And if you're interested in that sort of thing, the slow and boring way to get rich, we got to get a hold of each other. And me, I'm easy to find, especially on LinkedIn, because I got this distinct last name, and I'm the only one on LinkedIn with it. But if you
Nice.
scan this QR code with your phone, that brings you to the FAQs page of 506 Beanie, which is the platform where I offer that service of documenting your prior substantive relations so you can do 506B deals and you have some proof to give the SEC when they audit you. Once you get to a certain amount of assets under management, the SEC checks out what you're doing, making sure you're not pitching people all willy-nilly, because
Mhm.
that's no good. These are all illiquid assets, and you have to realize that before you get involved. But Mark, if people want to get a hold of you, I know we cross paths via LinkedIn, so that's probably a good spot, but maybe there's a website or something that's better. How should people reach out?
Yeah, I'm at raisecapital.com. It's RAZE capital.com, or, LinkedIn, whatever.
Love it. I love it. And the last thing I have, it's actually not for you, Mark. It's a public service announcement for you in the audience, which is if you've been watching this episode and you've been experiencing like searing pains in your eyeballs
Mhm.
and like migraine like symptoms, I'm really confident it's the downright hideous subscribe button, which is right down there. And to get rid of it, you just click on it and it's free. So like you don't have to put yourself through any of that. And it's true, full disclosure, I'm biased. I want people to click it because if enough people do, then YouTube will start to pay for these videos instead of me. And I think that'd be amazing. But the trade off for you, just so you know, it means that my videos might show up on your list of suggestions, but you don't have to follow those suggestions. Quite frankly, I just appreciate the fact that you spent this time with me. Just like Mark, I appreciate you joining me today. This is great getting to know you a little bit better.
Yeah, absolutely. Thanks, Dan.
Awesome.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.